Hey everybody, my name is Zach Pasquarello. I own Harrisburg Bookkeeping. I currently have 44 clients who I do bookkeeping for, and I teach other people how to start their own bookkeeping business. If you are a real estate investor and you need help with your bookkeeping, go to my website, harrisburgbookkeeping.com, and schedule a one-on-one consultation with me. I would love to work with you. If you are an aspiring bookkeeping business owner, I have a course specifically designed for you. I will teach you everything you need to know about starting your own bookkeeping business from start to finish. Bookkeeping fundamentals, QuickBooks Online tutorials, marketing strategy, sales techniques, and finally, how to manage your clients. There's a link in the description of this video. You have to check it out. In this video, I'm going to talk about tips and tricks for real estate investors and how they can do their bookkeeping, or how you can do the bookkeeping for them. I'm going to talk about a couple things specifically. Most importantly, how to record HUDs whenever you purchase or sell a property. And then I'm going to talk about class tracking, why it's important, how to do it, and what does it look like. So this, first and foremost, you need to be using QuickBooks Online. So I just created this QuickBooks Online account, and side note, please excuse me, I lost my voice over the weekend. My best friend just got married, so my voice is a little raspy. So please forgive me. I'm going to do my best. Like I was saying, first and foremost, you need to be using QuickBooks Online. And this is just an account that I made today. And I am going to show you how to start doing class tracking, and then I'm going to tell you what it is and why it's important. So first of all, you need to go into your gear icon in the top right hand corner, select subscriptions and billing, and you need to make sure that you either have QuickBooks Plus or QuickBooks Advanced. If you have Simple Start or Essentials, you will not be able to do class tracking. Okay, then you need to go to the gear icon, click Account and Settings, then click Advanced on the left-hand side, and then you will see this Categories right in the middle here with the first option of Track Classes. Go ahead and turn that on. And if you want, you can check this box, Warn me when a transaction isn't assigned a class. That's fine. And then we're going to click Save. Click Done in the bottom right-hand corner. Now we have enabled class tracking. Now let me tell you why that's important real quick. So first of all, if you are a real estate investor and you only have one property, probably not that important. But after you get two properties or more, you want to be able to run your profit and loss and your balance sheet based on your properties. And the best way to do that is to assign each transaction individually a class. So for example, you're going to start receiving rental income from multiple properties. So anytime you receive rental income from each property, you want to designate that rental income and assign it to a class, aka assign it to its property. That way you can see how much money did I make per property. The exact same concept with expenses, and the exact same concept with assets and liabilities. So obviously with expenses, you want to see how much money did I spend on that property. That way, at the end of the month or the end of the year, you can find out how profitable was that property. And you can do that by enabling class tracking and giving each transaction a specific class or a specific property. Also with your balance sheet, you want to see if you receive a security deposit, you should give that security deposit a class associated to a property. That way, whenever you run a balance sheet for that property, whenever it comes time to sell it, or if you're just checking in on the assets and liabilities for that property, you are able to see, okay, there is a $1,000 security deposit still out there for that property. Let me track that down. Maybe somebody owes me $1,000. Maybe you owe somebody $1,000. And also, if you have loans, multiple loans from the same company or the same person or the same private money lender, and they're sending you money, then you can differentiate between those loans based on the classes. So they might all be categorized. Like let's say, for example, Lima One Capital is a pretty big private money lender. Let's say they're giving you loans and you just want to assign all of the loans to Lima One Capital as on the chart of accounts, that's your liability. But for each property that you get a loan from Lima One Capital, you want to give it a specific class. That way, whenever you run the balance sheet, you're able to see how much debt am I in on this property. Okay, so that's kind of fundamentally why we want to do class tracking. Now let me show you how to do it. It's really super simple. First of all, we will just create a new transaction. Click the plus new button in the top left-hand corner. And in this example, we will just create an expense. And then every expense on the right-hand side here is going to have the option for you to give it a class. So in this example, we need to create a class. We will create 1 Main Street. So that's a class. And then we'll do 2 Side Street as another class. So now we have 2 separate classes. So whenever we create, here's an expense for property taxes in October for $987 for 1 Main Street. Here is property taxes for 2 Side Street. Then we can go to our reports, profit and loss by class, and we can see here 1 Main Street, 2 Side Street, property taxes, property taxes. This is the best way to show profitability by property. Okay, now this is a HUD statement. This is what every real estate investor is going to get whenever they buy or sell a property. So this is an example, and on the left-hand side here we have borrower. So this is the person buying the property. On the right-hand side, we have the seller. So right now, we are only concerned with the borrower. And I'm going to show you how to transfer this information into a journal entry. So real quick, I'll orient you to what's going on here. $30,000 is the purchase price, $500 settlement charges, $35 and $536 are taxes, $405 looks like lot rent. And then if we scroll down here, there was no loan on this property, which is a fairly unique situation, but with a cheap property, happens all the time. So this person, cash from borrower, $31,000. So this person paid $31,000 cash to purchase this property. Now, let me show you what this looks like. So first of all, plus new in the top left-hand corner, journal entry. Let's just say the property was purchased on October 3rd. So first of all, we need to add this as an asset. Fixed asset, building. We're going to call this 1 Main Street. You have 2 options. If this particular client only has a couple properties, you can create a new chart of accounts for every property, like we're doing in this example. Or you can just lump together all of the properties under one parent account, name it buildings, and then each property just gets added to the buildings chart of account. So if your client has 30 plus properties, it's probably not going to be realistic to give each property a new chart of account. That's just going to make the balance sheet way too crowded. So in this example, we're going to create a new fixed asset account, 1 Main Street. We will give it the class designation of 1 Main Street. Now this gets a debit. Let's check back here, $30,000. So debit, $30,000, description, contract, sales price. Next, we have settlement charges of $500. Settlement charges get capitalized, which means we add them to the basis of the property. Settlement charges, 1 Main Street for the class. Okay, going down, we have city taxes for $35.14. Taxes do not need to get capitalized whenever you purchase the property. So we can expense those as property taxes, $35.14. Once again, 1 Main Street. Assessments, $536.56. I will categorize those under property taxes. Let me make sure I got that right. $536.56. 536. All right, and these are assessments. I try to be as detailed as possible in the description. And then it looks like we had to pay for rent. So $405.73. This might have been a mobile home. So we have to pay for rent, $405.73. So those are the total amount due from the borrower. So typically, this person might take out a loan, maybe a $20,000 loan to purchase this property. But in this example, there was no loan. It was just $31,477.43 cash from borrower. And then the last thing I like to do, I like to attach the HUD to the journal entry in QuickBooks. Now what we can do is we can go back to our reports, look at the balance sheet, customize, filter, class, 1 Main Street, run report, all dates, run report. Now we have fixed asset, $30,500. Now let's look at what happens whenever you sell this property. There are a couple ways to do it. A lot of it depends on if you're flipping houses or if you're holding them for more than 12 months. Let's just assume in this scenario, this real estate investor is flipping this property. So they are not holding it for more than 12 months. So we are going to sell the property, and let's look at that journal entry. Remember, we currently have $30,500 in a fixed asset, 1 Main Street. All right, so in order to get that off the books, we need to credit 1 Main Street for $30,500. Give it a class. Now, in this example, we are going to run this property through cost of goods sold because we're flipping the property. So we're going to treat it like inventory and then cost of goods sold. So really, this should not be a fixed asset. This should be more like inventory because we're flipping the properties. So we're going to credit the asset, debit COGS, the house cost for $30,500, give it a class. So now whenever we look at the balance sheet, the assets wiped off the books. Whenever we look at the profit and loss, we're going to show a $30,500 expense in the form of COGS for the purchase price of the house. Now, if we would have fixed the house, we would have either wanted to capitalize the cost to fix the house, or we can just expense the cost to repair the property in real time. And if we expensed it, it'll automatically show up on the profit and loss. If we capitalized those costs, then they would have added to the basis of the property, which means we would have been carrying a value greater than $30,500 on the balance sheet. But we're going to skip all of that. We're going to keep it simple. So now we're going to go to the sale of the property. So the left side was the borrower, the right side is the seller. So the first HUD was the original purchase of the property. Now this is the sale of the property. This particular real estate investor was able to sell this property for $87,500. So we're going to create a new chart of account called Flip Revenue. If you already have an existing income account, that's fine. Use whatever makes sense for your business. We're just going to call it Flip Revenue, and then we are going to credit $87,500 for Flip Revenue. And then we have adjustments for items paid by the seller in advance. So these taxes are something that the seller already paid for, so now the seller is going to get reimbursed for these taxes. So this is going to be a credit for these taxes, which means it's going to reduce the taxes on the profit and loss. So we have 3740, 109.97, and 303.57. And then we have rent that was prepaid for 562.57. Whenever they're selling the property, it's important that everything in this top section for gross amount due to seller, everything should be a credit, whether it's income or expenses being refunded. Everything in this top section right here should be a credit. And then everything in this bottom section should be a debit. So we have settlement charges to the seller. So I created a new account, cost of goods sold, settlement charges, and that's $25.81.50. That's a debit for settlement charges. And then finally, cash to seller, $85.93201. And then we can go through here at the end and we can just copy and paste the class. And then, like I said, go ahead and attach the HUD to the journal entry. Okay, save and close now. To wrap it all up, let's look at the balance sheet to see what it looks like. there should be nothing on the balance sheet for this property. So we can filter by class. We can go to 1 Main Street, run the report, go to all dates, and we have nothing here except for income and money going in and out of the checking account. So that's good because we no longer have the assets. So there should be no more liabilities, no more assets related to this property. Now, the last thing you want to do is go to the profit and loss just to check profitability on this property. Same thing, we're going to filter by class, 1 Main Street, go to all dates. So here we have flip revenue, which was the sale price of the property, $87,500. And then the cost of the house, $30,500. Settlement charges, property taxes, a rent reimbursement for a grand total net income of $53,000. This is why it's so important to do class tracking. That's how you record a HUD. Obviously, every client, every situation is different, but hopefully that gives you a little better understanding how to do bookkeeping for real estate investors.